Let's talk about the truth to short squeeze stocks, in particular, ticker symbol of the stock HKD, which was a monster. And I realize that I'm going to be called a hater. I realize that I'm just jealous. I realize that, you know what, Clay, you didn't make money on this. So now you're just trying to, rain on other people's parades. I know, just save yourself in the comment section. I know that I'm going to get those sorts of comments because I'm aware that it's going to come across that way. However, anybody with a good amount of experience is going to say, Clay, you know what? You sound bad, but you're actually telling the truth about these short squeeze stocks, because the way human nature works, the way the human mind works, there is a reason why it appears one way when in all actuality, you know that for just as many, if not even more, it was the exact opposite to what the appearance is. So let me set up a little context here, and then I'm going to show some screenshots that illustrate exactly why these sorts of stocks, yeah, that they can make you money, no doubt about it, but that is a two-sided coin. So let's first start off some context. HKD, you can see, went absolutely nuts. Started off right around, let's just call it $18, and in the span of basically 2 weeks, went up to a high of $485. Which is absolutely crazy. And I should note that by the time this video goes live, there will be a couple more days. So who knows, maybe the stock goes even higher, or I don't know, maybe things turn around. So you'll have much more context by the time you're watching this live. But enough has happened for me to make the point that I want to talk about in this video. But we had this big move, and then I do a watch list video at the end of every day where I review certain, ticker symbols out there. And I did not do HKD for the reason I'm going to talk about here. But hey, Clay, why didn't you talk about HKD? And then another person, Melissa, says the same thing. How can you not mention HKD? But here's the kicker, and here's what I want to mainly focus on for this video. Everyone was making a ton of money on this stock today. And I want to focus on the word today. So today, and what is the claim about today? Well, everyone was making a ton of money. And let me be very clear, I believe her. I believe that she made money, and I believe that other people made money. But everyone, not even close. Now, why does it seem this way? Well, I'll save that to the end of the video on why it seems this way. Maybe you've already connected those dots. Like I said, it's just basic human nature. But why is this not exactly what it seems to be? Well, let's take a look at all of this, and this is what we're looking at here, the level twos. And level two specifically being what's going on with buyers and sellers. And I took this screenshot just because I wanted to illustrate this point, because this is just crazy at this junction in time. So this snippet in time, this is what we were looking at. And if you're not familiar with level twos, let me just explain what you're looking at here in a very basic term. So if you wanted to buy HKD and you wanted to know that for sure you're going to be able to buy, you would have to pay $375 per share. Now, don't look at I know. Well, I'd never be able to afford that in the first place. You're thinking too deep into it. Just take it at face value because I'm not necessarily talking about the prices, just more so the general idea. So if you wanted to get in for sure, then $375 would be the price that you'd want to pay. And then if you wanted to sell, so if you got in, you're like, okay, I now want to get out, you'd have to sell for $360. Now, the difference between the buy price and the sell price is called the spread. So depending on how new you are, maybe you've never heard that term, but that is known as the spread, and not to insult your intelligence with the math, but the difference between those two numbers is $15. Now think about that, $15 spread, meaning I want to get in right now and you buy. If you want to get out, the best you can do, and I'm just going to use 100 shares to keep the math easy, the best you can do if you buy and then all of a sudden want to sell is a $1,500 loss, just like that. Boom, $1,500 loss based on the spread alone. So think about it. People that are buying, you need that spread to go way in your favor. You need that stock to make a pretty big move just to get back to break even. Just to say, all right, now I'm going to sell. Okay, it's break even. You need the stock to go quite a bit. And then on top of that, what happens if the stock doesn't go in your favor at all? Let's say it gets just a little worse for you, meaning the price actually starts to go down. Well, that $1,500 loss is all of a sudden that much bigger. And that's only with a little bit of a movement in your favor or against you. What happens if it goes moderately against you? So it doesn't crash, but it certainly moves a little bit more than just a bit. Now you're looking at a pretty huge loss. But let's say no, the price just, I mean, it totally turns around. Again, not a total collapse, but just turns around. You're looking at a massive, massive loss just because you're so far behind with that spread in the first place. Now, I realize, well, Clay, you could do this and you could do that. And I understand that. But even those things, you're still not going to get around the idea that if you want to get in right now, you'd have to buy at that 375 mark. Because I know some people are saying, well, Clay, you could try to play the spread. You could try to, and you're right, but there's no guarantees that you get in. And for sure, a lot of the people that are making money, they don't understand these advanced tactics. They're going out there, they're hitting the offer, and then they just start to pray. They start to cross their fingers and say, well, I hope this keeps going up, because if it does not, I am going to get absolutely destroyed because of the spread and what I just talked about, in the sense of, even if it just drops a little bit, I'm still so far behind with that $15 spread in the first place. So in other words, these are total degenerate gambles. Because if you're willing and again, now I'm coming at you from somebody that actually wants to treat trading seriously, that wants to have structured risk management plans in place. If you're coming at it from that point of view, not the, hey, you know what, I'm just going to have some fun. I'll save myself a plane ticket out to Las Vegas. Okay, then fine. You're in a different category. You already shut this thing off. But if you're coming at this from I want to treat this seriously, I want to be here for the long term, have good habits, which is going to come from managing risk, then there is no risk control possible when you're looking at a $15 spread. Especially as a beginner. I mean, yes, again, you can, and this is even way debatable, you could maybe do certain things, maybe you can get filled at the spread or at the bid, but again, under the premise that you just want to get in and you want to make sure that you take part of the trade, there's no risk management. The only risk management is to hold or cross your fingers, hold your loved one in their arms, and just hope that the thing keeps moving up, because that's your only hope. And if that's your only hope, if there's nothing else you can really do, that is just a flat out gamble at that point in time. And yes, I know people made money on it because it did go up, but all it takes, and now remember, also along the way, it doesn't go straight up. There are plenty of times where it dropped back down. So you know that there's people out there that, wow, and they're looking at big losses, but they just start praying, holding hope. And yeah, the price did recover, but those are terrible habits. Holding and hoping, yes, once in a while it will work, but all it takes is one where it doesn't work, and then your account, your month is wiped away, and it's just right back to where you started, if you can even start, if you lose all your money. And I get it, Clay, you're just being dramatic. No, I've been through these before. It's really just, and I understand the psychology of it. If you made money on this one, I seem like I'm bitter, I'm a hater, I understand. Because everyone was making money, which brings us to the final point here. Why do you think it seems though everyone was making money? Yes, you can go on social media and you're going to see all sorts of people bragging about, hey, my members did this on HKD. I did this on HKD. And there are people going to be showing all sorts of big gains. But you know what? What about, that feels good though, right? Does it feel good if you got absolutely destroyed on HKD? Is that something that you're going to want to go out there and publicize? Now, maybe there's some stuff on Wall Street bets that our people are admitting that they got crushed on HKD. That's one of the, in a bizarre way, places or things I respect about Wall Street bets is they are a bunch of degenerate gamblers, but at least they'll post losses and stuff like that. But in many other places of social media, people aren't going to go out there and brag about getting absolutely destroyed on this one. No, it's going to be the people that make money, like Melissa. Hey, I've made a ton of money. And again, Melissa, good for you, but you were just degenerately gambling on that because it could have easily just as, turned around and destroyed you based on the spreads alone on this thing. So, I mean, if you made money, great, but you got to be open-minded to the fact that, you know what, that it could have turned out much differently for you. And who knows, maybe you're one of those people that got in and the price dropped for a bit, and then you're showing a loss unrealized, but then again, it did turn around. Again, you were already playing with massive fire, and I'm glad it turned around for you, but just realize that those are not the habits that you're going to want to have for the long haul in terms of managing risk. So just be aware of it. Yeah, it seems like everyone's making money because those are the people that want to brag about it, are the people that made money, not the people that got absolutely crushed. So the truth about short squeeze stocks is, yes, they can be great, but there are certain ones where you have just insanely low volume and you have these massive spreads. And like I said, for every one person that does very well, for sure, there's at least one person that does very, very poorly. But I think there's probably even more people that do very, very poorly. Again, just based on the nature of those spreads and how quickly the losses show up and how quickly they add up because you're already so far behind due to that spread. So that's my thoughts on it. I'm not saying to avoid short squeeze stocks. I'm just saying you better tread carefully, especially if you are a beginner, and especially if you didn't know what the term the spread meant when I went through this video. So hopefully you learned something in that regard, but 100% guaranteed you should not have touched this stock if you just learned about in this video what the spread is. That would be a good signal that you're getting way far ahead of yourself. But I hope this helps. I know, I'm a hater, I'm jealous, I don't know how to trade, I'm a terrible trader. I get it because I'm sitting here bashing this stock that did very well. But like I said, just consider some of the things I've talked about, consider how the spread works and how dangerous and risky that stock and that trade actually was. First off, thanks so much for watching the entire video. Real quick, before you go, I want to invite you to a live webinar, web class, training, workshop, online event, whatever you want to call it, but it will be me live revealing to you what I've discovered that has allowed me to transform myself from being an employee to being my own boss, including how I had only one losing day out of 73 days in total. I'm going to cover 3 keys that have helped me unlock profitable consistency within the markets. The first key is super weird, but in a productive type of way. The second key is super awesome because it quite literally is wired into our DNA as humans, making it very easy to use. But in a cruel way, this becomes a pitfall for many traders. I'll explain it all though, including how to avoid the pitfall that it creates for some. And yeah, the third key, when you hear it, sounds way too good to be true, but it's not, and I'll show you how it all works. Then at the end, I open it up for a question and answer session that is, again, totally live. Even if you can't make the live session, please still sign up as it will be recorded, and you can go back and watch the replay that I will send you. Click the image on the screen or click the link down in the description box so you can get the date and time and claim your spot, which I should note is limited due to the fact that this truly is a live event. If you have any questions, let me know. If not, I'll be seeing you soon.